Alrighty, welcome back. Here we have another video on price action. We are currently looking at the NASDAQ. And in the last video, let's go see where we were so that we can kind of see where we went. So on the daily chart, we were sitting at 23,420. So if we look at the daily, 23,420 would be these two candles above this high. So these two candles above this high, boom. Around 23,420 is where we closed. And we got a little move to the top of this channel, which showed clean rejection here. A little fake out to the upside for bulls, and then a nice flush to the downside. Taking an entry here for shorts would have been ideal, but if you watch the last video, this is kind of where technically sound entry would, a more technically sound entry would be for shorts, would be at the bottom of the support channel. So happening with the price. Let's just go take a look at the last video. Paying attention to these dynamic highs, and we can kind of look for an opportunity to wait for price to either break out of this zone and retest it for a continuation to the upside, or we can see it do the continuous pattern that it is making in this little channel. So a move to the bottom of the support would be expected, and we can target those lows as long as we see price fully rejecting this. And what you want to do is you want to drop down to the lower time frames. If you see that happening on the higher time frames where it's already wicking off, then maybe you can drop down to the lower time frames and see if you can get an entry after the model presents itself. So once again, keep this video short. So the model presented itself. If you're watching this on the daily chart, you can see two nice rejection candles wicking off the top of the resistance, exactly how I mentioned. You get faked out, all of the short positions get stopped out, and then the market flushes. So like I said, this entry wouldn't have been ideal in my opinion. I would have much preferred an entry at the 23,250 level, because that lies exactly where support comes, and this support actually comes all the way from 2022. So this is the channel where shift of structure happened right about here, and we started to get this continuation to the upside, and we've been respecting this channel for quite some time until February came. We dropped to 1600s in April, that little market scare, and a move back up. Not only did we get the move back up, but we crossed paths and we entered back into the 2022 channel that we now broke under. So to move forward with price action, we can expect either this is going to be a nice zone to avoid, and you can actually tell that this is exactly where price decided to get stuck. And we can see here, this is a very, very strong area, and we've moved right back into this zone. So we managed to stay in here from June 26th all the way till the 14th. About 2 weeks, a little over 2 weeks. So I would expect price to get very, very stuck in these areas. Now, that it's Sunday, market will open, and there's always that chance of a gap up or a gap down, which is always to be kept in mind when the market is closed and I'm making these videos. But if we don't have that gap up or gap down, this is what we should be expecting. We should be expecting an off week, a week where you can sit on your hands and just wait for price to consolidate, because we consolidated, expanded, and now we should expect another consolidation. So I do have some zones drawn out here. If you would like to see continuation, we can target the 22,400 level, and that would be the next zone where price can escape this chop and actually see some continuation. That is more likely to happen now that we have this strong move to the downside, but depending on where we open and how it reacts to this chop zone, then we can see a continuation to the upside, and I want that continuation when it escapes all of this chop. So although we are in this lower range of chop, we could potentially hop back up into this higher range, which would lie around here, and then we can actually see a price price just pivoting back to the upside. If we can see the escape from this range. So the levels are there. The entry for long should be in my analysis, the entry for long should be around the 23,100 level, and entry for shorts to see continuation to the downside lies around 22,745, 22,750, around there. So I hope these levels help. If these levels do help, leave a comment, leave a like, subscribe, and I'll catch you guys on the next one. Peace.